Welcome to the 2024 Economic Depression and Preparation Channel. Thank you for joining me on this Wednesday, November 6, 2024 edition. And right now, we're looking at a strong rebound in employment as it hosts U.S. Services Manufacturing Index to more than 2-year high. And so recently, we've had the jobs report come out and say that it was kind of softening the last 2 months, in September and October. But construction workers here, as you can see, they're installing windows in a new building here in San Diego, California. So the manufacturing service sector index increased by 1.1 points to 56.0 in October. This is the highest it's been in over a year. Of course, the trade deficit is still rising to over $84.4 billion in September, but imports jumped and exports declined as Washington continues to grapple with a trade deficit and a strong dollar currency is what they're grappling with right now. So we'll continue to monitor that to see how it goes. But the bottom line is that there is some signs of a rebounding economy in terms of the manufacturing, but the jobs numbers are still soft and inflation is still high. Today on the Dow Jones, as you know, it surged more than 1,500 points. Of course, this is due to the record win by our President-elect Trump here. So Dow Jones soars on optimism and hope, and what's going to be coming in the next couple of months here. 1,500 points. Nasdaq was up. S&P 500 was up. Russell 2000 was up. Bitcoin was up. On gold and silver were down today. But Dow Jones closed at a record close of 43,729.93. This is the last time the blue chip Dow jumped more than 1,000 points in a single day. It was back in November 2022. And we were in the midst of the health crisis back then. So with this, many people are expecting a little bull run here to finish out 2024 here. And this is coupled with the fact that the markets are baking in that rate cut there. As you know, the rate cut is coming here. Fed is expected to cut interest rates again on Thursday by 25 basis points. And this is according to CNBC.com. So we have interest rates coming down. We have mortgage rates going up. That follows the bond market. But we also have this surging stock market here, of course. Now, whether or not Main Street pockets are surging just yet remains to be seen. But right now on Wall Street, that's surging as the Dow Jones, S&P 500, Nasdaq, and Russell 2000 all continue to surge right now. So the Federal Reserve Bank is meeting, of course, after the elections here on this Thursday and Friday to make that decision. So they're going to be about 25 basis points market. And maybe the markets have already baked that in today. But that's going to bring the target range interest rates down to 4.75%, 5.0%. This is going to hurt high yield savings accounts and things of that nature, as the APY is going to be coming down on a lot of these accounts, on money markets and CDs and high yield savings. But the good news is that we're cutting rates into a so-called growing economy right now. So we'll see how it goes. But we'll have to wait and see how things play out next year, because, like I said, the Fed may hold off on cutting rates next year, depending on how things go once we get over the holiday season hump and they get those retail numbers in to see where people have been shopping, and if gas on food and energy costs continue, if they rise or not, with heating costs and all that. That's going to be coming up later on in the winter season. So we will see. Boeing workers end their strike. They vote to accept the deal. Now, we still have more deals coming here. As you know, we still have that outstanding port worker strike, even though that only lasted less than a day. That lasted like 24 hours on the East Coast, the shipping port. But they apparently just postponed that to January, so we'll see. But Boeing workers, in the meantime, accept their deal to end their strike. As you know, this is one of the longest strikes that we've had here over on the West Coast. International Association of Machinists, IAM, said rank and file members voted 59% to approve the deal. And so that's good news there. Boeing said it was pleased with the outcome, so both sides didn't have to go into much mediation or arbitration to make this work. There's 33,000 union members. They had been on strike since September 13th, so they lasted longer than the shipping port people that were on strike on the East Coast recently. So they've been on strike since September 13th. They'll start returning to work on Wednesday, which is today. They'll get a 13% raise, 9% raise of each of the next 2 years, and then another 7% in the fourth year and final year of the contract. So they receive a pay raise that exceeds 43%. They'll get a bonus of $12,000, which they can contribute to their 401k retirement accounts. But they do not get the traditional pension plan. They lost that in 2014 from the previous labor deal. And this is something that we're going to see more of. We're going to see more strikes in various industries here. And this is for higher pay, because inflation is going to take time to come down, even though we've gotten past the elections and all of that. it's going to take time for these numbers to come down. You and I know that. It's going to take time for this inflation to come down, and it may never fully come down because of this amount of money printed that was in the system due to the health crisis, due to other things going on these last 4 or 5 years. And so that was injected into the system. And so this is what we're battling. This is what we're faced with. But the bottom line is that the stock market likes it. Main Street, Wall Street like it, regardless of whether Main Street likes it or not. We have to be prepared for either scenario to take advantage of some of these gains on the stock market, and also to take advantage and be prepared by having our food, water, security, medicine, supplies, help, community skills, neighborhood skills, community skills, because it's not over yet. Just because things may be going up on Wall Street doesn't mean Main Street is all of a sudden going to be feeling the benefits, reaping the benefits of this turnaround here. So just keep that in mind as we continue to go through these upcoming weeks here, the fourth quarter of this year. And we'll look forward to seeing what the Federal Reserve Bank chairman has to say, Jerome Powell, in terms of his meeting notes. We know a rate cut is coming, but we're looking forward to see for any future rate cuts that may be coming in 2025 or not. Leave rates unchanged, depending on if they can shake this economy back to life here. So thank you for joining me on this day. Be blessed. Be sure to subscribe to all your friends and family. To subscribe if you can. And I appreciate your support. I'll talk to you very soon in the next video. Thank you very much. God bless.